Hello, and welcome back to the channel. I'm Algabot, your guide to the world of automated trading on MetaTrader 5. Today we're taking a close, educational look at an expert advisor called Breakout Channel Rider. This is a pure price action strategy. It uses no traditional indicators at all, no moving averages, no oscillators, just the raw highs and lows of recent price bars. Over the next few minutes, you'll learn exactly how it spots a breakout, how it rides a trend, and how it manages its exits. Remember, everything here is for educational purposes only and not financial advice. Let's get started. So what exactly does Breakout Channel Rider do? At its heart, this is a trend-following strategy built on one of the oldest ideas in technical trading, the channel breakout. Instead of relying on calculated indicators, the strategy reads structure directly from the chart. It watches the highest high and the lowest low of a set number of recently completed bars, and those two levels form a price channel. When price closes beyond the edge of that channel, the strategy treats it as a fresh directional break of recent structure, a move that has, by definition, pushed past everything the market did over that look-back window. Because every level comes straight from raw bar highs and lows, the approach is what traders call point size and timeframe agnostic. It doesn't care whether it's looking at a foreign exchange major, gold, or a stock index, and it adapts naturally to whatever time frame the chart is set to, whether that's 15-minute bars or 4-hour bars. The same logic simply rescales to the size of the channel in front of it. The strategy uses two channels, not one. The first, wider channel, defines the entry, the breakout that opens a position. The second, faster channel, is narrower and is used purely to manage the exit, trailing behind the trade and releasing it when price snaps back through recent structure. This dual-channel design is what gives the expert advisor its name. It aims to enter on a break, then ride the move with a tighter opposite channel until the trend shows signs of reversing. Who is this style of approach suited to in an educational sense? It tends to appeal to people interested in trend-following systems and clean, rules-based logic with no subjective indicator interpretation. It's important to understand that trend-following approaches can experience many small losing trades during sideways markets, and trading always involves the risk of loss. This video is educational information only, never a promise of results. Let's walk through the mechanics step by step. The expert advisor acts once per newly completed bar, so it isn't reacting to every tick. It waits for a bar to close, and then evaluates its rules on that finished candle. First, the entry logic, which only runs when the account is flat, meaning there is no open position. The strategy measures the highest high and the lowest low over the prior number of bars set by the EntryChannelBars parameter, which defaults to 20. These two values are the top and bottom of the entry channel. If the just closed bar closes above the top of that channel, above the highest high of the previous 20 bars, the strategy signals a long, or buy. If instead the bar closes below the bottom of the channel, below the lowest low of those bars, it signals a short, or sell. Notice that the channel is always measured from prior bars only. The bar being evaluated is never allowed to be part of its own channel, so a level never, in effect, sees itself. When a position opens, the strategy immediately places a protective stop loss. That stop sits a fraction of the channel's height away from the entry, controlled by the StopRangeFraction parameter, which defaults to 1/2. So if the entry channel is 100 points tall, the initial stop is placed 50 points from entry. The idea is that a break which retraces that far has likely failed, and the position is closed to limit the loss on that idea. From that stop distance, the strategy also derives a backstop take profit, set by the take profit multiple parameter, defaulting to 3. That means the take profit sits 3 times the initial risk distance away, a final safety target in case the trailing exit never activates. Now the exit logic, which only runs while a trade is open. This is where the faster, narrower channel comes in, defined by the ExitChannelBars parameter, defaulting to 10. The strategy requires this exit channel to always be faster than the entry channel. For a long position, the moment a bar closes below the lowest low of the recent exit channel bars, the position is released. For a short, the moment a bar closes above the highest high of those bars, it's closed. This trailing structure is what lets winners run while a sharp snapback through recent price ends the trade. Every decision, entry and exit alike, is read purely from completed price bars. Let's look at the actual MetaQuotes language code that runs inside MetaTrader 5, just as you'd see it in MetaEditor. At the top are the input parameters. EntryChannelBars, defaulting to 20, sets how many bars back the breakout high and low are measured. A larger value means a slower, more selective channel, while a smaller value reacts to shorter-term breaks. ExitChannelBars, defaulting to 10, controls the faster trailing channel. The smaller it is, the tighter the exit hugs price. StopRangeFraction, at 0.5, sets the initial stop as a fraction of the channel height, so raising it gives the trade more room, while lowering it tightens the protective stop. TakeProfitMult, at 3, places the backstop target at 3 times that initial risk. Lots sets the order volume, and Magic is the identifying number the expert advisor stamps on its own trades. Now the signal logic. The variable C-close holds the closing price of the just closed bar. The code first computes range, the height of the entry channel, as entry high minus entry low, and only proceeds if that range is positive. The first condition checks whether C-close is greater than entry high, meaning the close has pushed above the top of the channel. If so, it reads the current ask price as the entry, sets the stop-loss one stop range fraction of the channel below it, measures the risk as entry minus stop, and places the take profit that same risk multiplied by 3 above entry, before sending a buy order. The mirror condition, else if C-close is less than entry low, does exactly the same in reverse for a sell, with the stop above entry and the take profit below. It's clean, symmetrical, and entirely driven by where price closed relative to those 2 channel edges. Let's bring it all together on this illustration. On the chart, you can see 2 pairs of lines drawn from price itself. The wider blue lines are the entry channel, the highest high and lowest low of recent bars, and the narrower gold lines are the faster exit channel that trails each trade. Watch the left side first. Price is consolidating in a tight range, drifting between the blue boundaries while the channel stays flat. Then a strong bar pushes up and closes above the upper blue line. That break above the entry channel high is the long signal, and you can see the buy marker appear as the position opens. From there, price climbs steadily, bar after bar, and the gold exit channel line rises along beneath it, trailing the move. The strategy simply rides the trend. Eventually, a bar turns down and closes below that gold trailing line, the recent exit channel low, and the position is released near the top of the run, marked here as the long exit. Now watch the right side for the mirror image. After the long closes, price rolls over and begins making lower lows. A bar then closes below the lower blue line, beneath the entry channel low, and that downside break is the short signal. The sell marker appears. Price slides lower, and now the upper gold line trails down above it. When a sharp bounce finally closes back above that gold exit line, the short is closed, marked as the short exit. 2 trades, one long and one short, both following the same simple rule. Enter on a break of the wide channel, ride the move, and exit on a close back through the faster channel. Of course, not every break leads to a trend, and losses are a normal part of any strategy. And that brings us to the end of our look at the Breakout Channel Rider Expert Advisor. We covered how it reads structure directly from raw bar highs and lows, how the wider entry channel signals a breakout in either direction, how the protective stop and backstop take profit are calculated, and how the faster exit channel trails each trade until price snaps back. Remember, everything in this video is educational information only and not financial advice, a recommendation, or a solicitation to trade. If you found this breakdown helpful, please consider liking the video, leaving a comment with the strategy you'd like analyzed next, and subscribing for more MetaTrader 5 strategy analyses. You can find more at www.algobot.live. Thank you so much for watching. Past performance does not guarantee future results. Trade responsibly.